Today, I want to delve into the imminent AMC and GameStop squeeze, potentially orchestrated single-handedly by Roaring Kitty. Based on recent options data, the AMC is seemingly scrambling to thwart his efforts. Jake Friedel tweeted about his suspicions, saying, "I think I know what Roaring Kitty is up to, and will confirm it once his YOLO update is released." He elaborated that someone bought a substantial number of $10 calls back in May when the price hovered around that range. It's plausible that Roaring Kitty sold these calls to acquire 5 million shares along with $20 calls. Now, he's likely targeting the $25 calls and offloading the $20 calls, effectively setting up a gamma squeeze on his own. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads, and also enter our giveaway. But everyone remember, this is not a financial advice video. This theory is compelling, but is it backed by data or facts? For concrete evidence, we'll have to wait for Roaring Kitty's YOLO update on Reddit. Meanwhile, the Bronx Viking discovered substantial activity around GameStop's $50 calls expiring on July 19th, with a staggering $27 million involved. He shared a screenshot indicating that thousands of $50 call options were purchased, over 5,000 just today. Unusual Whales also noted that an hour ago, new positioning poured $32 million into the $50 calls, with the $30 calls expiring on Friday being the most popular. It's possible that Roaring Kitty is behind these transactions, or it could be another major player with millions to invest in GameStop calls. However, we must consider the possibility of a hedge fund executing this strategy to mimic Roaring Kitty's tactics, creating confusion. The short bear highlighted significant selling in the $20 call options, with multiple 5,000 option orders resembling Roaring Kitty's style. This scenario opens up the hypothesis that a hedge fund might be accumulating these contracts in small amounts only to offload them simultaneously, making it appear like Roaring Kitty is the one selling. With the data suggesting that Roaring Kitty might be selling $20 call options and purchasing $30 and $50 calls, this strategy could indeed trigger a gamma squeeze. Additionally, the Bronx Viking proposed another hypothesis. If Roaring Kitty is selling these call options, is he using the generated cash to exercise the remaining options? Over 55,000 GameStop $20 call option contracts were closed today, roughly half of Roaring Kitty's position if it was him selling. This cash could be used to exercise the remaining 60,000 calls, compelling market makers to buy him 6 million shares, thus putting them in a tight spot. Biggums added that the AMC appears desperate to prevent Roaring Kitty from exercising these calls. A recent update to the AMC rule policy indicates that as of May 28, 2024, the regular exercise settlement date for physical delivery stock options is the first business day after exercise. More specifically, the AMC has the authority to postpone the settlement of any option when deemed necessary in the public interest or under unusual conditions. This raises the question of whose public interest they are protecting, the hedge funds or the retail investors. It's plausible that the AMC, SEC, FINRA, and DTCC are more aligned with hedge funds' interests. If the AMC blocks Roaring Kitty from exercising, it will be intriguing to see his next move to elevate GameStop's price. Conversely, if they don't, the impact of market makers having to buy millions of shares could be significant. Peruvian Bull pointed out the recent massive buy pressure on GameStop, absorbing 75 million additional shares in just 3 trading days and pushing the stock back towards $30 per share. Despite extensive efforts by shorts, including 75 million new shares of dilution, retail investors have kept the price climbing. Interestingly, Citron Research announced they are no longer shorting GameStop, acknowledging the market's irrationality. They stated it's not due to a belief in a company turnaround, but recognizing that with $4 billion in the bank, GameStop has ample runway to sustain and grow, rendering the short thesis untenable. This shift in perspective is crucial as more shorts realize that GameStop and AMC have robust financial positions, making shorting them increasingly impractical. In conclusion, the evolving dynamics around AMC and GameStop, driven by Roaring Kitty's strategic maneuvers and significant market activity, illustrate a potential for a substantial squeeze. The AMC's response and the hedge fund strategies will be pivotal in shaping the outcome. As retail investors continue to show resilience and significant buying power, the future of these stocks remains a compelling watch. The shifting stance of prominent short sellers like Citron Research further underscores the changing landscape and the potential for significant market movements in the near term. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.